CGTN's Miro spoke to Frank Lavin. He's the CEO of Export Now, a U.S. firm that runs e-commerce stores in China for international brands. She asked him how he's convincing his clients to enter China, especially now with rising trade tensions with the U.S.
I would say this, every successful brand, if you want to be a global brand, you need a China strategy. You cannot be a global brand and ignore China. So you have to figure out how to do business in a market where there can be trade tensions or trade friction. And that has implications for operating style. It's back to that previous point, the mistake of nothing or the sin of nothing. Don't just treat China like Canada. It's going to be different. So, but we'd say go step by step, move incrementally, but move. Don't wait, because not every day is going to be a sunny day. But China will always be there. Chinese consumers will always be there.
You're an expert in trade. In your previous government role, you were the Undersecretary of International Trade at the U.S. Department of Commerce. And what we are seeing recently between the U.S. and China, the tit for tat on tariffs, the increasingly confrontational tones from both parties. In your opinion, is this unusual? Should we be worried?
Well, in some respects, it's somewhat typical. I would say in some respects, it's a bit unusual. The more normal part is that the tariffs that have been imposed are generally within the range of what we've seen historically. Every few years, there seems to be some kind of trade dispute. Tariffs are imposed. They usually are only in place for 2 or 3 years. They're usually only a segment of the market, and then they fade. So that I think is generally consistent with the pattern in trade over the last few decades. What is a little bit different this time is the tone is more combative. The tone is a little bit more accusatory. I don't think that helps, but that's where we are.
Foreign companies often have concerns about market access and weak intellectual property protection when doing business in China. But staying away from such a vast market is not an option for any ambitious global player. What is your experience like? How do you strike the balance between risk and reward?
First of all, your premise is accurate, that there could be more IP issues in China than in the United States, than in the home market. So this is troubling for some American brands. But what we would say in the first instance, the best defense is a good offense. As soon as you open up an e-commerce store, you will see the counterfeit items shrink in sales, because the Chinese consumer increasingly prefers the authentic item. They want to go to the authentic store. So the most important step you can take to combat IP problems in China is to get your products in the market. If you aren't in the market, then the counterfeiters have 100% market share. If you are in the market, you knock it down to 50%. Then what we say is be a polite nuisance. We have a communication strategy where we monitor the pirates, we monitor the counterfeit brands, we can contact the platforms. The major platforms all have takedown policies. So if you see a counterfeit item on that, you can take it down, you can keep on, but you need to monitor, you need to police the marketplace.